Hey everyone, welcome back to Your Money Your Life podcast. We're in episode 323 of the pod. So make sure wherever you're listening, you like, subscribe, 5-star rate, and review this podcast. Let's get into it this week and look at the market. There's actually a lot that we can discuss in terms of what the market is doing over the past 5 days. And obviously, we'll pull the picture out. But the past 5 days, we've had a resurgence. I think what we're seeing here is investors are saying, okay, we're comfortable with what's going on in the with the war. We're comfortable with the numbers. We're comfortable with understanding that we feel that everything that the investors feeling that everything will be resolved at a certain point. And so now you're seeing a resurgence in the market. The past 5 days, past week, 5 trading days. I'm recording this obviously on Thursday morning. 2.73% increase that we have on this S&P 500 ETF. And if you look at the past last yesterday, almost up a percent, up over 0.75% for the day yesterday. And over the past month, we've now climbed up almost a 5% increase. Almost a 5% increase. And year to date, the market is now 2% positive year to date. Since the beginning of the year, we're now 2% positive. So that was short lived. That was a short lived blip. You saw that it kind of started early March. We had the blip, and it looks to be so far that we bottomed end of March. And since April, we've been on a trend upwards. Now, again, I was in the camp that maybe this resolution would take a little bit longer to figure out, and that the market would be more volatile for at least a week, at least a week or two more. I was on record saying that, but if we're off by a week or two, or if the market or if the investors think that now they have a clear understanding of what's going on and they feel comfortable buying, and that may have been where it was. But again, we've taken action for clients and for ourselves, myself personally, for this anyway, right? You don't want to try to time exactly. You're not going to day trade or time it exactly within a several hours or a week or a day. You want to just do your best to understand and be patient. If someone was impatient here and said, I'm gonna liquidate everything or sell because everything's going down, that's just not the right move to make. Never is the right move to make. And we've always said that. Just be patient, just wait, take advantage of it, know that it's an opportunity for buying, and that's what most people should be doing. So now I don't know if we're fully out of the woods yet. Again, the market seems to appreciate that there is a resolution, and that's why you're seeing a kind of a resurgence. And are we close to highs? Like we're getting close to, and maybe even surpassing. I mean, look what we got here, folks. 699. Did we have 699 prior to? Man, we are zooming again. So yeah, that's something to all keep in mind, is just patience is the best thing that, and people are very impatient. Like when have we ever had a, what is this, a half a month, a three-quarters of a month pullback? There used to be bear markets for years, right? 2022 was a full year. This is if you're impatient in the market, it's just doesn't bode well. So keep that in mind. Let's go to current news. What's going on with the actual businesses? So Snap is going to lay off 16% of their workforce under activist pressure. So Snap announced Wednesday that it would lay off 16% of its workforce and close another 300 open roles. This is following pressure from activist investor Eurenic Capital Management to streamline its operations. So shares in Snap surged 10% pre-market. Companies expect to save more than 500 million a year on the cuts, which will affect about 1,000 employees' income as advertisers prioritize bigger platforms like Meta and Google. So, activist investor, if you're not familiar, is really just either a larger shareholder that will try to use their platform, their public opinions, their um, stake in the company to coerce change within management of the company. So they're obviously not within inside the company as a employee, but they will are shareholders, and they will use their platform and their ability to try to course change. And then so they want to Snap to streamline, become more efficient. Streamline just definitely means, hey, cut overhead, fire people, pretty much. So that's the nice way of saying streamline. So they took to it. They're going to lay off 60% of their workforce, and save some money. And the market liked that. Obviously, it's not fun for the people that are going to be cut. And if you think about it, Snap is an interesting position of all the social medias. It's like a niche one that I guess young kids use. I used to have a Snap. I don't have a Snap anymore, or at least I don't use one. Um, and so, like, I don't know who's exactly on it. Like, besides, I guess, younger kids, college kids. And so that's a great demographic to market to and advertise to, obviously, but for advertisers. But it's just, I don't know how much they can grow. I guess politicians are using it too, but I don't know how much they can grow. Um, with that being said, it's just I don't know how much they can grow. So they definitely have to cut bottom line or increase bottom line by cutting some expenses. So that's interesting. That's interesting. Okay, so Snap. We'll have to keep an eye on that. Live Nation. So I don't know if anyone was watching this, but Live Nation and Ticketmaster, they were in legal trouble recently. A jury has found that Live Nation and Ticketmaster operated as an illegal monopoly. They were overcharging fans in violation of U.S. antitrust law. The verdict in the federal court in New York is a win for states that pursued a lawsuit after the Department of Justice reached a settlement with the company. It could have far-reaching consequences in the music industry as a U.S. district judge determines monetary damages and other possible remedies. So they went to. I think it's interesting because like Live Nation, Ticketmaster were brought to court. I think on a federal level and some states that sued. It looks like this is the Attorney General for North Carolina. He just said on LinkedIn, "We just won. Ticketmaster Live Nation was the biggest antitrust case in years. A jury just ruled for us on all claims. We brought this case with a big group of AGs and US DOJs until last month when the US DOJ cut a backroom deal with Live Nation in the middle of the trial and bailed." So, states and the United States, so individual states and the United States Department of Justice were all suing. Man, they all came after them. That must mean they were really doing something. Um, but the United States Department of Justice cut a back deal with Live Nation and left the states to hung out to dry. And then Jeff Jackson also explains that states rejected the deal and finished the trial. And now the jury has found that they've been operating as a legal monopoly and used their power to unlawfully raise ticket prices on you, the consumer. This is a huge win for consumers and artists, but it also sends a message that we can still take on monopolies and win. He says the case now moves to the second phase, where the judge will determine the specific remedies needed to dismantle Ticketmaster's grip on the industry. Interesting. I'm curious what they're going to do. Live Nation Ticketmaster. I remember there was an article a while back where there was a couple Live Nation employees that were like laughing at the fact that they're just overcharging people for stuff. So they got you. They got us. And now it looks like we got them back. Interesting enough. Okay. Live Nation. Let's move on. Footwear. Okay, this is an interesting story. So, footwear firm Allbirds shifts to AI focused business. So, if you remember Allbirds, I never had them. A lot of people did. They were a footwear company that came popular during the pandemic. And yeah, a lot of people just started talking about it. They went public. They were at one point raised their several billion-dollar company, but then all went to heck and they just lost all their the share price plummeted. The company obviously not doing well, but they said they're going to shift to an AI company, and then their stock surged. So let's talk. Let's look at this article. So changes afoot at Allbirds is a company known for sneakers that is moving into an AI infrastructure. Shares soared by as much as 700% Wednesday on the news, rising above $17. This is up from less than $3 at Tuesday's close. The company's new name will be New Bird AI, and it's seeking to raise up to 50 million in the funding by the new end of year fiscal year. Last month, American Exchange Group agreed to buy Allbirds' assets and intellectual property for 39 million. That's interesting. The market cap was 21 million. Now it jumped to 159 million. But yeah, this was used to be $1 billion company, and their market cap went down to 21 million. That's kind of crazy. But now they're trying to switch to AI. They just everyone knows they could use the word AI, the buzzword, and a lot of like day traders and retail traders and people are just going to pile in, and maybe some institutions. I don't know, but it seems to be more of like a day trading rush. With that being said, so yeah, I mean, I don't know what that even means. They just said they're going to be AI. What does that actually mean? What are they going to do? That's still to be seen. But yeah, they just piled into the AI rush, and I just don't. I think this is short lived. I don't think it's going to work for them. We don't know what they're doing, but once we find out, we can assess. But I just don't. I just don't get that. Let's look more at the market. S&P 500 and Nasdaq closed at record highs Wednesday. This is yesterday for the people who listen. Thursday, markets have been buoyed by a drop in oil prices, surging bank profits, and the possibility of a peace deal that reopens the Strait of Hormuz. The Nasdaq is on its longest winning streak in years, an 11 session run that has erased wartime losses. While investors expect energy markets to remain disrupted, they're bullish on consumer spending and AI driven tech economy. So, yeah, they're saying, hey, we think the resolution will happen. NASDAQ is on an 11 session run. That's one of the longest winning streaks in years. And AI, consumer spending, people don't give a crap. They're spending and we're having a good time. All righty. All right, we know tax day was yesterday, most annoying day of the year. Yeah, that's pretty much the big things for us to discuss so far. Let's look into our question of the week and see what we have. It was a couple good ones, I thought. So we'll see. First one being, if a student successfully appeals their college financial aid offer, how much additional aid do they typically receive per year? So if they successfully appeal their college financial aid offer, how much aid do they typically receive? I don't know. I would say per year, if we're going per year, maybe a few thousand per quarter. I would say anywhere between 10, 15. Answers 3 to 5 thousand per year over 4 years of college. How much additional aid? So I don't know how this works, but you can appeal your financial aid. Oh, that's interesting. So if you don't know, if you're a student out there, you can appeal your financial aid and get some more, up to 3 to 5 thousand per year on average, potentially, or more or less. Let's roll the dice. Never know. Let's do another question. The World Economic Forum projects AI will displace 92 million jobs globally by 2030. How many new jobs does it project will be created? That's an interesting question. People are talking about, oh, they're losing jobs, replacing all this good stuff. Not good stuff, all this stuff. Well, what's being created? There's investing this money elsewhere, and presumably they're going to need, the infrastructure for sure. And I guess since we're talking about AI, it's going to a lot of it run by itself, but you're going to need some people. So I think it's maybe 1/4 of the amount of people. So we're talking 19 million, I would say. If I'm doing quick math, 19 million. I don't know. 19 to 20. Let's do 20 million. Oh, plot twist. AI actually might be hiring. Answer is 170 million. So a net gain of 78 million jobs. That does surprise me. Um, Yeah, so the Future of Jobs report, this is published by the World Economic Forum. They said that the job disruption will equate to 22% of jobs by 2030, with 170 million new roles set to be created and 92 million displaced, resulting in a net increase of 78 million jobs. Interesting. So, I mean, if you're just someone looking and thinking about college and stuff, you have to go into AI. I mean, that's just where all the jobs are going to be. You have to be going into AI. That's crazy. So it's a net increase in jobs. I don't know how true that is. I don't think companies are planning to have more hires than less. But maybe there's just new companies created. That could be it. That could be it, folks. Well, I'll tell you what, it is it for this week's episode of the Your Money Life podcast. Make sure you like, subscribe, 5-star rate and review. We will see you next week.